look up. I'm gonna look up a new tab here, and I'm just gonna search mortgage rates. Can you please do that, because there's terminology that I need you to know before you graduate. I just want you to know that. And we are going to pick. If you're not doing it yourselves, that's okay. Just look up here and follow. So we can, for example, look at, there's the HSBC, that's a bank. There's Cambrian Credit Union. Credit unions are usually lower. Let's click on that. I'm just going to click on what the mortgage rates are right now. Please work. I just need you to open that. Okay, let's try this one. There we go. So I want you to, so Cambrian right now has a special offer of a 2-year fixed mortgage rate at 3.87. Okay? What does the 2-year fixed mean? That essentially tells you that for 2 years, they're guaranteeing you this rate. If you have your mortgage for 2 years, you're guaranteed this, no matter what happens to the market. That is what fixed means, okay? So I don't want you to panic when you see that. I don't want you to be, thrown off by it. Let's keep looking for rates. Let me see here. I'm going to see all rates right there. Click on that. Click again. There you go. So they have a bunch of other interest rates right here. So they have a 3-year fixed at 4.19%, a 5-year fixed for 3.99%. So some folks don't like risk, so they're like, you know what, I'm gonna grab even though it's more than the 2-year, I'm gonna grab the 5-year rate, lock it in, and for 5 years, I don't have to worry about what the market does. Because the interest rates go up and down over time. I will show you historically what interest rates have been, and then you will see what I mean. Okay. I hope you follow as much as you can. Okay. Mortgage rates, history. I know I'm misspelling maybe. Graph. Okay. So let's see here. We'll look at that one. Visit historical mortgage rates. I just want to see the graph. Oh, there we go. Is this in Canada? It's similar to what Canada is, even if it's the US, the data is about the same. Look at this. In the 1980s, the interest rate was about 18%, right? In the 80s, it went up to 18%. When I talk to older folks, they're like, I almost lost my house during that time. Because it went from, being in the 10% range or less, all of a sudden it just spiked. And what has it done since then? Do you notice the general trend? Like if you were to take the top here and compare it to like in the 2020s, do you notice that the interest rate is way lower? Okay. Why has this happened? Market crashes in 2008. Were you alive in 2008? I can't do the math. You were alive, but you were very young, right? You were born. Oh, yeah? Okay, that's right. So that we had a big market crash in the US. The housing market tanked. If you had money during that time saved up, that would have been the best time to buy a house. Because in the US, people were like a house that's 300,000 was selling for like 100,000. So if you had the money, you could have like made huge gains there. But anyways, that happens in 2008, but then it kept going down. So just after COVID is right about here, right? 2020, it went down even further, but look what happened after COVID. It went up quite a bit, right? It went up quite a bit. So whoever signed right here, pay attention to this part. If you signed right here for 5 years, you're having this low interest rate for 5 years. You keep that interest rate, even though in the market, whoever comes in after is paying a higher rate. That's why locking in is a good idea in this case, but you don't know what's going to happen to the market, right? What if you locked in for 5 years here, and all of a sudden, but it's going down. You're locked in for 5 years. Like, you can't come out of it. You're going to pay a penalty if you do that. So that's what locking in means, okay? Even though it takes you 25 years to pay it off, you're locking in for 5 years, guaranteeing that rate for 5 years. So within the 25-year stretch, the interest rate can change several times over the 25-year stretch. Okay? So that's something that I want you to know. Okay, let's go back to that. I asked you to go to the mortgage calculator. Okay? Anybody, maybe help me out. What is the average house price right now in Winnipeg? Can somebody look it up? Can you look up the average house price in Winnipeg right now? Just Winnipeg in general. Let's go average of Winnipeg. Okay, well, we'll see. I think it's in the 300 something. You are right. You are right. The area depends, has a huge impact. But I think I just want to, like, for this exercise, let's just go Winnipeg in general. 400,000? Okay, 400,000. So I'm going to go and click advanced. You see a whole bunch of options. You can do this anytime. If you're about to buy a house, or if you're wondering what my payment will be, let's do that. So let's put in here, 400,000 is the price, correct? Did you know that you have to have a 5% down payment? You have to. Like, you're not going to get approved unless you put 5% down. So let's do a little bit of math here. What's 5% of 400,000? $20,000, right? You need to have saved up $20,000 to buy a $400,000 house. So how much are we borrowing if we need to put this one down? We're borrowing $380,000. Okay, so that is our mortgage amount. I want amortization is like how long you're gonna take. You have choices. You can, I think you can go up to, I don't think you can go past 40 years, to be honest. I don't think a bank will allow you to do that, but I think I've heard of 30-year mortgages. We're gonna select 25, that's the default. We're gonna make monthly payments. What is the interest rate? What is the lowest interest rate we saw earlier? The 2-year special. 3.87, right? I'm gonna go with that one. The interest term, it was technically only a 2-year term, so we're gonna select 2 years. And now let's calculate. Let's do that. Press calculate. So your monthly payment is $1,900 or almost $2,000. Okay, that is just to pay off your mortgage. So let's look at the chart. I like this chart right here. Let's click on that. It tells you, right, at the very beginning, you kind of have an idea how the amount that you owe them is going to come down, right? How it's going to drop over time. So that's kind of cool. I will close that. Here's where this is the one I need you to pay attention, how to save on interest, because the bank is going to charge you a lot of interest. You're going to find out soon, okay? Let's make an extra payment. Click on that. And let's make an anniversary payment. You can't see that, so hold on. Let me adjust this thing here. What does anniversary? I did savings. What does an anniversary payment mean? Every year you add. So we're going to do that. it asks you, do you want a percent or you want a dollar amount? Let's say every year we put in an extra $1,200. That means $100 a month that you saved up, you have that pooled up, you're putting that down every year. Repeat for, we're going to do that for the 25 years. Okay? Apply. Oh, what happened here? Please enter percentage. It can be anywhere between 1 and 10%. Oh, they want us to put this in. Okay, so we're going to go. What's wrong with that? Let's apply it. Oh, it has to be between 1 and 10%. I got it. So let's go 1%. I'm going to change that to 1%. It's going to change that, so now it's more 3,800. Let's try that. Okay, what's happening here? Based on the payment options, this anniversary payment cannot be applied. Please select fewer years. Okay, I need you to understand this. If you put more down, you're going to pay it off faster than 25 years, right? So you can't do this for 25 years. We're going to go, let's go save here. Let's do this for 10 years. Every year for 10 years, you're going to pay an extra $3,800 a year. Let's apply that. Look at this. Your savings. $40,000 in savings. And some students or some people don't understand that, but wait a minute, I was paying more. How come I'm saving? You're saving because you're paying it off faster, saving you interest. Okay? So you've saved. You can do that in many ways. You can do the top up every year. You can tell your bank, you know what, I would like to make $50 extra every month. I'd like to put in $50 every month extra. I've done that. And when times are tough, you don't make enough money because you have extra bills coming in, you call them and you say, hey, can you take that extra off for now? I can't do it right now. But every chance you've got, please try to pay it off as fast as possible. The number that I didn't talk about that I should have way from the beginning, look at this number right here. How much interest will you have paid over the 25 years? $171,000 in interest. Okay? If you pay it off faster, you will save 40 grand off of that. And I don't know about you, but I would like to have an extra $40,000 in my pocket if I didn't have to give it to the bank, right? So just so you know, that's how that works. If you want to look at the chart again, look at that. You can see the yellow is with the extra payment being made. Look at, you're going to be done faster, right? This is probably 22 years or 21 years instead of 25. So these tools are very, very helpful. Please use them. Be wise when you make your decisions on buying a home, okay? All right. I am going to stop